we saw the meanings of the various terms in relation to the sinking fund method as well as the procedure of sinking fund method in detail in the previous video. Now, let us discuss the journal entries in sinking fund method. But before that, let us once again refresh the procedure and the chronology of the transactions that take place in the sinking fund method. The first step to be done is to calculate the amount of profit to be set aside annually. This amount is ascertained with the help of the sinking fund table. Once the amount to be set aside is ascertained, then step 2 is to transfer such amount to the debenture redemption fund account at the end of each year, from the first year to the final year. Once the ascertained amount is transferred to the debenture redemption fund, then step 3 is to invest such amount in marketable securities and debit the same to debenture redemption fund investment account. Step 4 is to then receive interest on the debenture redemption fund investments at the end of each subsequent year. Step 5 is to repeat the same process of step 3 and step 4 every year except the last year, that is the year of redemption. So step 5 is to continue keeping aside an ascertained amount for investment and collecting the interest earned on investment and reinvesting such interest also along with the amount set aside to be invested. Finally, when the same process is kept on repeating and the final year arrives, step 6 is to receive the interest on the investment for the final year. Step 7 is to keep aside the ascertained amount for the final year, that is the year of redemption. And then at the end of the final year, step 8 is to encash the investments made from the first year up to the second last year. Now, the interest up to the final year is received. The amount to be kept aside is also allocated and kept aside for the final year, as well as all the investments are also encashed. So, the company has the funds ready for the redemption. But before paying off for the debentures, the company has to ascertain the profit or loss made on the debenture redemption fund investments. And step 9 is to transfer the profit or loss arising out of the investments made from the debenture redemption fund investment account to the debenture redemption fund account. Finally, the company redeems the debentures by making a payment to the debenture holders, which is step 10. And then at last, the balance reflecting in the debenture redemption fund account is transferred to the general reserve in the balance sheet. Now, let us discuss the journal entries for all these transactions. But before that, first let us see what are the accounts that are involved in the journal entries relating to the sinking fund method. The accounts that are opened or affected while making the appropriate accounting treatment as per the sinking fund method are the statement of profit and loss, debenture redemption fund account, debenture redemption fund investment account, bank account, interest on debenture redemption fund investment account, debentures account, debenture holders account, and general reserve. Now, let us see the journal entries in this regard. In the first year, the transactions that take place are firstly, the ascertained amount of profits is set aside towards redemption of debentures. And secondly, the amount so set aside is invested. For setting aside an ascertained amount of profit, the amount has to be taken out of the profit and loss account. This is done by debiting the statement of profit and loss with such ascertained amount that has to be set aside. The corresponding credit is given to the debenture redemption fund account. The statement of profit and loss is debited in order to remove such amount from the statement of profit and loss. The amount so ascertained has to be transferred to the debenture redemption fund account. That is why the debenture redemption fund account is credited. When the debentures are redeemed in the final year, then the balance in the debenture redemption fund account is transferred to the general reserve. Once the ascertained amount for the year is set aside and transferred to the debenture redemption fund account, then the same is invested in marketable securities. The investment made from the debenture redemption fund is called as debenture redemption fund investment. The investment of the amount is done by debiting the debenture redemption fund investment account with the amount being invested. The corresponding credit is given to the bank account. Investments are an asset to the company, and so the debenture redemption fund investment account is debited. When the investment is being made, the money is going out of the company into the investments, and so the bank account is credited. We saw the journal entries that need to be passed for the first year when the company starts to keep aside funds as per the sinking fund table so as to arrange necessary funds for the redemption of debentures. From the second year onwards, for every subsequent year other than the last year, that is up to the second last year, the transactions that take place are: firstly, the company receives the interest on debentures redemption fund investments made, and then such interest is transferred from the interest on debenture redemption fund investment account to the debenture redemption fund account. Then the amount of profit set aside for that particular year is also transferred to the debenture redemption fund account, and finally the complete balance in the debenture redemption fund account, which is the amount set aside for the particular year plus the interest which was transferred to that account, is totally invested in the marketable securities. So from the second year onwards, firstly the company receives the interest on the investments made. This is accounted by debiting the bank account with the amount of interest earned on the investments made. The corresponding credit is given to the interest on debenture redemption fund investment account. Since the interest is received, it means money comes into the company. That is why bank account is debited. Interest on debenture redemption fund investment account is basically an interest account. And when interest is an income to the company, it must be credited. Hence, the credit to the interest account. Next, such balance of interest should be transferred to the debenture redemption fund so that it can be further invested from the fund account. The interest amount should be taken out of the interest account and put into the debenture redemption fund account. This is done by debiting the interest on debenture redemption fund investment account with the amount of interest received on the investments made. The corresponding credit is given to the debenture redemption fund account. The debit is given to the interest on debenture redemption fund investment account to transfer the credit balance available in that account. The credit is given to the debenture redemption fund account since the interest amount is being transferred to this account. The net effect is that the interest earned on the investments made is now available in the debenture redemption fund account for investing in the present year. Once the interest has been received and transferred to the debenture redemption fund account, then next the ascertained amount of profit which the company sets aside for the purposes of redemption has to be set aside. This is done in the same way how it is done since the first year. Since the amount is taken out of profits, the statement of profit and loss is debited with the ascertained amount that has to be set aside. The corresponding credit is given to the debenture redemption fund account. The effect of this entry is that the annual amount that has to be set aside gets transferred from the statement of profit and loss to the debenture redemption fund account. Now, the total amount transferred to the debenture redemption fund account is the interest received on investment and the annual amount of profit set aside. These amounts are now invested in marketable securities. The investment of the funds available in the debenture redemption fund account is done in the same way how it is done in the first year. The debenture redemption fund investment account is debited with the total of the annual amount of profit set aside plus the interest received on investments. The corresponding credit is given to the bank account. The net effect of this entry is that Money is invested in marketable securities from the amount available in the debenture redemption fund account. These four transactions, that is A, B, and C and D, these four transactions will go on from the second year up to the year before the last year. Now let us see what are the transactions that take place in the last year, that is the year in which the redemption of debentures happens. Coming to the last year, this is the year of redemption. In this year, firstly, the interest earned on investments made is encashed and transferred to the debenture redemption fund account. And then the debenture redemption fund investments are also encashed. Also, the annual amount of profits are set aside for the last year. Once the investments are encashed, the profit or loss made on the investments is calculated and transferred to the debenture redemption fund account. Finally, the debentures are redeemed and the debenture holders are paid, and the balance in the debenture redemption fund is transferred to the general reserve. Now that we discussed what are the transactions that take place in the final year, let us now discuss the journal entries for these transactions. Firstly, the company receives interest on investments made. The entry for this is similar to what we saw before. This is recorded by debiting the bank account with the amount earned on the investments made. The corresponding credit is given to the interest on debenture redemption fund investment account. The effect of this entry is that the bank account increases and the interest income is received. Once the interest is received and credited to the interest on debenture redemption fund investment account, then it has to be transferred to the debenture redemption fund account. For this also, the entry is same what we saw earlier. The interest is transferred by debiting the interest on debenture redemption fund investment account with the amount of interest received on the investments made. The corresponding credit is given to the debenture redemption fund account. With this, the net effect is that the interest on debenture redemption fund investment account is closed and transferred to the debenture redemption fund account. Next, in the final year also, the ascertained annual amount of profits has to be transferred to the debenture redemption fund account. This is also done in the same way as we saw for every other previous year. Since the amount is taken out of profits, the statement of profit and loss is debited with the annual amount of profit that is to be set aside. The corresponding credit is given to the debenture redemption fund account. The effect of this entry is that the annual amount that has to be set aside gets transferred from the profit and loss account to the debenture redemption fund account. Now, since this is the final year, the company encashes all the investments that it has made out of the debenture redemption fund, since this is the year in which company has to get together all the amounts that have been set aside and utilize that amount to repay the debentures. The investments made are encashed by reversing the entry that was recorded while the investments were being made. This is done by debiting the bank account with the value of the investments realized. The corresponding credit is given to the debenture redemption fund investment account. The bank account is debited since money comes into the company. The investments are closed, that's why it is credited since credit decreases the asset. With this entry, all the investments made through the years by setting aside an annual amount of profit gets encashed, and now it is available with the company for the redemption of the debentures. Once the investments made are encashed, the company has to ascertain if there has been a profit or a loss on such investments made. Such profits earned or losses suffered have to be transferred to the debenture redemption fund account. If the company has earned a profit on the investments made, that means that there is a credit balance in the debenture redemption fund investment account. Such profit is transferred to the debenture redemption fund account by debiting the debenture redemption fund investment account with the amount of the profit earned. The corresponding credit is given to the debenture redemption fund account. With this entry, the profits available in the debenture redemption fund investment account is transferred and the account is closed. If the company has suffered a loss on the investments made, that means that there is a debit balance in the debenture redemption fund investment account. Such loss is transferred to the debenture redemption fund account by debiting the debenture redemption fund account with the amount of loss suffered. The corresponding credit is given to the debenture redemption fund investment account. With this entry, the loss amount that was reflecting in the debenture redemption fund investment account is transferred and the account is closed. Once all the transactions relating to encashing investments and transferring of profit or loss on investments is done, we can see that the annual amount of profit set aside, the interest on investments, as well as the encashed investments are all transferred to the debenture redemption fund account. The interest on investments as well as the actual investment amounts are received in the bank account. Now, the company has to redeem the debentures. So, firstly, the company records the amount that is due to the debenture holders and then redeems the debentures. To record the amount due to the debenture holders, the debentures account is debited with the nominal value of the debentures. The corresponding credit is given to the debenture holders account. The debentures account is debited since the debentures carry a credit balance and when being redeemed, they have to be debited. The debenture holders are credited to create a liability against the debenture holders which has to be discharged by the company. Next, the company pays the amount due to the debenture holders by debiting the debenture holders account with the amount paid to them. The corresponding credit is given to the bank account. The debenture holders account is debited since the liability against them is being discharged. The bank account is credited since money is going out of the company to the debenture holders. And finally, once all the transactions are done, then the balance in the debenture redemption fund account is transferred to the general reserve. This is done by debiting the debenture redemption fund account with the balance reflecting in the debenture redemption fund account. The corresponding credit is given to the general reserve. You can see that in the course of the journal entries, the only account related to the debenture redemption which still has a balance in it till the end is the debenture redemption fund account. All the other accounts like interest and investments are closed by transferring the balance to the debenture redemption fund account. So at the end, this particular entry closes the debenture redemption fund account also and transfers the balance to the general reserve. This sums up the sinking fund method, which we saw in detail and also understood the logic behind the same. With this, we come to the end of this chapter on debentures.